The Hedgeless Horseman here. It's June the 7th, 2024. First of all, thanks to the sponsors. I got a few copper juniors on board recently, and that would be Prismo Metals, Kodiak Copper, and Hanan Metals. Yeah, so let's dig in. First of all, metals right now seem to be down, and I mean every single day I just get more and more evidence why I shouldn't even try to guess where metals are going in the short term. Not even the medium term either, really. Long term, we all, we have an idea. It's like we know gold is in a given fiat currency, gold just goes up forever because governments destroy the value of money forever. So that's not a long shot. I mean, we know gold is going to hit. If the USD is still the USD, we know gold is going to hit $3,000 one day, $4,000, $5,000, etc. Until something material happens, like there's a new currency, if you know what I mean. I mean, theoretically, if things were, left to get really bad, then obviously every currency would kind of have a Weimar Republic kind of situation. It just depends on the pace, really, when you think about it. How quickly is the currency being destroyed? If it really collapses, then it would go vertical like it did in the Weimar Republic, and you would have wheelbarrows of money, and a gold coin would cost $1 billion. Or you would have like what's happened with gold in USD. That I think the dollar's lost like, what is it? Over 80%, so its value relative to gold in the last 2 decades or 3 decades or whatever it is, which is absolutely massive, of course, and that's just in a few decades. When it goes down to 99.9, I mean, then we're talking maybe $1 billion. But the point is that we already know that commodities, especially gold, heads higher over time simply because of what governments do. But in the short to medium term, I have absolutely no idea. Like, take silver, for example. I've been following some debate on Twitter recently. I know quite a few people, I think, said this was the top, for example, convinced this was the top, and they sold a lot of their juniors as well, or maybe all of their juniors or whatever, and then silver kept going. And now they look really, let's say, stupid, whatever. And then, it started to correct again. I mean, look how volatile it is. What kind of a move is this? This is, and this is, within 1 day, I would guess, because these are hourly bars. So, in 1 day, it's like minus 5%, which is massive. And this move up was massive as well. So it's like massive move, massive move, massive move, massive move, pretty massive move, massive move, massive move. And on and on and on. And it's like here people got really bearish again, and then it almost retraced the entire thing. And then it went down again, and then we had this move, and now we're today, it's like I've been saying, if I just had to guess, if the metals are up today, I assume they'll be down tomorrow. If they're down today, I assume they'll be up tomorrow. That's probably as close as one can get to predicting the short-term movement, because again, it's like volatility is the name of the game. Up and down, up and down, up and down, up and down. Again, in the short to medium time frame. So we've seen excuse me, we've seen like victory laps to the upside, victory laps to the downside, like victory laps by bulls, victory laps by bears, then victory laps by bulls, victory laps by bears, and by bulls, etc. Again, I don't even try to pretend to have any idea. Where I think the metals are going here, probably felt like it was going to go lower. here probably felt like it was going to go higher, and the opposite happened all the time. That's why it's like, in my opinion, you should get into a habit of not caring, because everybody else cares about this stuff. That's what 90% plus of content is on Twitter. Basically, where metals and juniors and miners and stocks and every asset basically is going in the short term, meaning like tomorrow, or if we're down today, it's like you see a bunch of posts about the short-term targets to the downside. If we're up, it's short-term targets to the upside, and almost everyone is wrong. So I mean, you see a lot of posts like, and of course that depends on your strategy, but you see a lot of posts like, oh, you have to parry every move, don't be a bag holder, yada yada. And it's like, oh, it's imperative to have, I don't know, stop losses and getting a paid service so you know where the metals are gonna head in the short term or whatever. So I never used a stop loss especially in my mining career. I don't think I've ever used a stop loss actually. I don't try to bottom time. I don't sell here because I think it's gonna go down. I don't buy more here because I think it's gonna go up in the short term. I buy individual stocks that I think are dirt cheap now, that are pricing in. Let's say if metals went sideways for the next 5 years, I think they are very cheap, because it's like the idea is that they have internal value creation. So if metals didn't go anywhere, these companies could still increase the value by maybe a few 100% over the next 3 years. In that case, the metal price is like a positive surprise. But I think, as always, I mean, a lot of people shouldn't be stock picking to begin with. I think most people, I'm not saying everyone that's listening to this podcast does that, but most, and you will notice, most people, it's like they don't put much emphasis on due diligence. They don't have a clear strategy. They just buy something because they think, to quote Peter Lynch, this sucker is going up. And when it goes down, they don't know what to do, because the main strategy was simply that, well, I think the stock is going up in the short term. Not much emphasis on like what's the actual value, what do I think the next 10 news releases are gonna be? Why should this go higher? Why is the value higher than the price? How much can the value go up over time, etc. That's an afterthought. That's why every single time every single one of these dips, there's like shock and panic and euphoria on all the tops here, for example. I mean, to me, again, I don't trade based on my TA, but it's like, doesn't this kind of, I don't know, look like a bull flag? I don't know. Maybe. I certainly wouldn't be selling something. That's the thing. If something is cheap, if a company is cheap based on where the metal prices are, if they would be cheap even if the metal prices were a lot lower than this, why would I sell if I think there's a risk that the metal prices could go down? If I think a junior is pricing in, I don't know, like this silver price, for example, or that I think it can create so much value that it doesn't really matter where the silver price is, give or take, $5 up or down. Why would I care? Why would I care how silver looks right now, especially since nobody can predict where it's going in the short term anyway? No, it makes absolutely no sense, but that's basically what almost everyone is doing at all times. So that's why for example, when I did my presentation at Colorado School of Mines, I made a few points. I have no real strict rules. I don't try to market time. I don't do anything basically that almost everyone else says is important. Use stop losses. Again, try to predict where the metals are going. Never have paper losses. God forbid that you can be called a bag holder. I think you gotta be get very used to being a quote bag holder in this sector, because it's like, I mean, it's crap for 80% of the time, and now this window froze. Anyway, all in all, gold prices very good. I mean, $2,365. The miners are printing money right now, especially. I mean, oil is going down as well. Copper has had more of a retracement, and now it's kind of gotten bearish again. And you can feel that too. Now it's obviously feels like the ride is over. It's going to get worse tomorrow, or it's going to rain tomorrow because it's rained in the last 2 weeks or whatever. And that's just how it goes. So when I see how copper has performed last few weeks, does that make me bullish or bearish? No, I'm human as well. It's like, oh, if it's in a downtrend, it feels like it's gonna go down tomorrow. If it has rained for a week straight, do I think it's going to be sunny tomorrow? No, I'm assuming it's going to rain as well. That's just how it goes. But it's like in the weather in Sweden, for example, we had like maybe 2 weeks of really good weather, 20 to 25 degrees, or 20 to 27, I think actually. Excuse me, I'm still recovering a bit. Really good weather, but I just know, and that goes kind of back to the stock market. It's like I've been telling myself and other people, it's like, take advantage of the good weather, because it's not gonna last. And now we're expecting to have a week ahead of sub 20 degree weather with, like, a lot of cloud, some rain, etc. And that's obviously gonna change one day. But the longer we've had a streak of good weather, most people assume, because they don't zoom out, let's say, it feels like, well, I'm gonna assume that the weather is gonna be good tomorrow, because I've seen no evidence of having bad weather for the last 2 weeks. But I don't know if that comes back from, or if that comes from just appreciating how the weather works, or if it comes from the time in the stock market. It was like, the longer we've had a streak of good weather, my belief that it will end soon goes up, because it's gonna end, and typically, I mean, the longer the streak is, the closer we should be to the weather changing, and that's the same with sentiment in junior miners. Well, that's been a big rant about a bunch of stuff that's not maybe directly tied to the stock market, but still, gold prices really robust. Silver prices, can't argue with $30+ silver, even though silver juniors don't tend to be the cheapest ones out there. It feels like they're always kind of pricing in a higher price in the future. I would still say that if you look at the respective juniors, gold juniors, silver juniors, copper juniors, I would say probably gold juniors are cheapest, because I think the gold mines have the highest margins right now, higher than silver mines. I think so, on average. I absolutely think so. Same with copper mines. I don't think copper producers are printing money at these copper prices today. I don't think silver juniors are printing money. I think gold miners have the highest. I might be wrong, but I think that's the case, that gold miners have the highest margins right now. But at the same time, I think all of these juniors are kind of priced like they're in a bad business. Like the silver juniors are probably not pricing in, most of them, that they have anything resembling an actual business, that they have a mine or potentially has a deposit that could become a solid mine. Copper, I think that's the case as well. Copper juniors look really cheap to me. Of course, right now the copper price isn't that high, but it's still not disastrous. But gold, again, gold actually is very high. I think a lot of projects print a lot of money at today's prices. So from a risk-reward perspective, from a value perspective, I think gold juniors still is the place to be. And that, of course, doesn't mean that the gold juniors will go the highest. It's just from a risk-reward perspective. Anyway, this is kind of funny. Roaring Kitty, the guy who got famous from GameStop, he's apparently or allegedly he's worth over 586 million right now from his GameStop his leverage position in GameStop. And of course the interesting part, is it easy to get envious of this? It's like, you know, I mean, this is obviously a massive pump. It's like a real movement. He put on leverage positions like the last time. Everybody, you know, on Reddit, whatever, got in on it, and probably a lot of other people that know what would happen. I mean, it creates a perfect storm of everybody, let's say, piling together, and he was basically the catalyst for that, and now he's up a shit ton. And you're sitting there, it's like, oh, I'm doing my value investing. I know these, let's say, these juniors are cheap, and what I have to show for it so far is like I'm still down, let's say, 50% in some juniors since I bought them. So I see a lot of tweets like, I mean, this stings the eyes of a lot of people that a guy could create a pump like this, and he's on paper worth 586 million. My point is that we shouldn't really care. It's the same with, I mean, the tendency that if we know someone has bought a stock at a lower price than us, we tend to not want to buy it because we're comparing ourselves to others. Like, oh, I might make money on this, but that guy is gonna make even more money. Even though it's like, it has no impact on our portfolio how someone else is doing or has done. So I think it's good, again, to train ourselves to be just simply rational. It's like, if Roaring Kitty becomes a billionaire from the meme stock GameStop, most of us obviously will never become dollar billionaires. I mean, is it easy to get a bit envious? That's like, well, this guy, he has, created a movement, a pump, and then he became a billionaire. It's not like he spent, like Warren Buffett, like 20, 30 years of solid, disciplined value investing, just gradually being proven right on average. No, this guy is like, in a few years went from almost, I guess, nothing to, halfway to a billionaire. Yeah, of course that's going to be, like, everybody would want to have a billion, I guess. But my point is that I think it's good to train ourselves, again, to just, accept that this has nothing to do with us. Our lives change nothing if this Roaring Kitty guy becomes a billionaire, or if he does not become a billionaire, or if he's very rich or not very rich. Has no effect on us. That takes nothing away from our journey. Because this is like one guy. I don't know if I'm making much sense, but my point is that as soon as, if we start getting envious of other people's results and it affects us, that's a slippery slope. So it's like, I think it's good actually to train yourself to be happy for other people, even if you don't think they deserve it in a sense, because at least it won't affect us negatively, like, what's the point? I'm giving up because you see stuff like this, and we're grinding away in the most hated sector there is, and it feels like there's no point because if people make billions in meme stocks, what am I doing trying to be a value investor? No, I think this is just mostly a sign of just how effed up the market is. I mean, in my opinion, as long as the crypto space is alive, and it's still very much alive, even though, yes, a lot of cryptos have actually gone down a lot from the tops. But that is still a fat bubble. So as long as the crypto space is still around, I think it's a golden age for value investors. Not that we're getting our returns, or let's say well-earned returns yet, but I think this is a golden age for buyers, because that is going to flip. Nothing lasts forever. So when we go towards real assets, hard assets, when the shit hits the fan, that is when I think we're going to get paid more than we could ever believe, and what most people could ever believe right now. So I think we're in a very fortunate situation where we have this extended period of being able to buy real assets really cheap, because there's a lot of cryptos that are still not anywhere close to their intrinsic value, which is closer to zero. So if people don't really care about real value yet, and it's more of a circus in the stock market, it makes perfect sense why our real assets would be undervalued. And of course, you can look at any period of any kind of mania. None of them last. And the same goes for when we go into a gold and silver mania. That won't last either. Or a copper mania, that won't last either. All we know is we're far away from a gold, silver, and copper junior mania. And that's going to happen one day. So let's dig into some companies. So Prismo Metals is my most recent sponsor. I talked about them after when I summarized my Deutsche Goldmesse visit. I spoke to a few companies that I wasn't really aware of yet, because I love new ideas, because you never know. I mean, the most fun I think I have, or the most fun part of investing, is to try to find the hidden gem. Because it's like let's say you find a hidden gem, something that you think is too cheap, you buy it, then you make money. Yes, making money is obviously fun, and that's that's the goal. But I think the hunt, the game, trying to, finding something that you think the market missed, that is, in my opinion, the most gratifying thing. That's what I enjoy. That's why I love to research. I love to do due diligence. I love to think about stocks, companies, and distill it down to a risk-reward scenario. I get absolutely ecstatic when I find something, when I identify something that I think the market is totally missing. It's not like I'm going to win on all of those, obviously, but the bet might be just too good to pass up. Again, a bet could be, hey, there's 4% chance of success priced in. I think it's closer to 20%. So that's very undervalued, even though the odds of me making money on it might be 20%. But in case those 20% hit, it's gonna, it's gonna reward me much more than it should, because it was pricing in, let's say a 5% chance of success. So I think Prismo Metals is one of those cases where it makes life easier simply because what the valuation is. So Prismo currently has a market cap of 8.7 million or 8.8 million CAD, which is pretty much nothing, right? So what is priced in of them having anything of significance? Almost nothing. I mean, back in in 2016 during the highs, there wasn't a company with with gold or silver in its name, or metals, I guess, in its name, that traded below 10 million. But okay, if we have a low valued company, it doesn't mean it's necessarily cheap, because there's juniors out there with absolute crap projects that are have no chance of really, or let's say a 1% chance of ever amounting to something substantial with real value. Then they might be, it's like right now, there's juniors out there that look to have low valuations. At face value they might look cheap just based on the absolute market cap, but they might still be very overvalued. And I think there's, at the same time, I think there are juniors out there that are undervalued by hundreds of percent. So what is the case in Prismo Metals, for example? Why did I get interested in them? Why did I accept them to come on as a banner sponsor? Simply because I think it's a pretty straightforward bet. To me, the biggest thing is their hot breccia target. Large copper prospect in Arizona. This is a high risk, high reward target. Then they have ground next to Vizsla Silver. Vizsla Silver is obviously one of the standout performers. They kind of own, an entire district of Wayne swarms, I was going to say. And you have Prismo with a sliver of land here. Obviously, it's very much the baby brother in the grand scheme of things. Still, this is probably going to turn out to be a mine one day. And of course, if you find anything close to an operating mine, that's going to be worth more than if you found something, even something small out in the middle of nowhere, where it's not big enough to be a standalone operation. So at face value, it's kind of, even success might be worthless. And then they have Los Pavitos, another project. But again, I think, honestly, I think for me, I'm mostly excited about hot breccia and this fact. I know what it costs to, I know what the bet costs. I know what it costs to play the hand. That's sub 10 million. I mean, I expect them to raise money for the drilling, but let's say 10, 12 million, whatever. Pricing in nowhere close to anything of significance. So it's just a lowly valued bet, or lowly priced bet. People involved, 29.6% ownership by insiders, founders, and advisors. You have Dr. Peter McGaw. I think pretty much everyone recognize him. Yeah, I mean, if he's on board, there's something of merit in terms of project quality, pretty much by definition, because I don't think McGaw, yes, he's involved with quite a few stories, but it's like, hey, I think all of those stories he's involved with, their concept, their geological concept, is probably robust. So here's the hot breccia target, or project and target, in Arizona, which is considered, I don't remember where it ranks on the Fraser Institute, but obviously it's in the US, and Arizona is like the main copper hub for the US. You can see all the copper deposits around here. Here you have, the absolute world-class resolution. That's still in permitting. I think it's been in permitting like 20 years or whatever. But copper is getting harder. We know the AI trend. Nvidia just reached 3 trillion in market cap, whatever. It's expected to require a lot of copper if this data center / AI trend keeps going forward, or keeps going like it has gone recently. And obviously you need a crap ton of copper for that, and copper is deemed as a strategic metal. We've seen China stockpiling a lot of copper, for example. So it makes sense. If let's say AI is, it appears there's an arms race, And that's why I think, I mean, obviously, Nvidia is at $3 trillion, because everybody's racing right now to win the AI race. That's between companies, and it's obviously also between nation states, because it's like might have geopolitical consequences of who, quote, wins. So is AI in a sense in a bubble? Well, in some way, shape or form, I guess it is, because like in the 2000 bubble, every company, every internet company, let's say, it was an arms race. But every company can't be a winner. I mean, if you have 4 big companies racing right now in AI, meaning they all want to be the top dog. They all want to reach the point, wherever that is, that they have market dominance. They have the best AI. You probably don't need 4 different AI versions, especially if they do the same thing at the end of the day. Why do you need 4 different AI companies if they provide kind of the same service? No, everybody wants to be the top dog that comes out with the best product. So the other 3, let's say, are irrelevant. And that's, I think, what probably is going to happen one day. Somebody is going to become kind of the top dog, and the other ones are going to get killed in their AI department because they're redundant all of a sudden. But until that happens, and we don't know where that's going to happen, there's an arms race. So everybody's plowing in a crap ton of money into AI and data centers, which require huge amounts of copper. And look, again, that's also driven, it's like if it's a geopolitical issue, you want to be the country that wins, because if that has huge implications for your competitiveness, or I mean, we have no idea exactly what AI might impact. Nobody does really, but obviously if you think it's a big deal to be the leader in AI because you think AI is going to revolutionize stuff, you know that the US and China, for example, like they're doing, yeah, they're going to have an arms race. And if you need copper for it, I don't think nothing is going to stand in the way of both countries getting that copper. So this is probably one of the best places you would want a copper deposit. It's in the US. Arizona is seen as a good jurisdiction. And it's this elephant country for copper deposits. So, the Hot Breccia target. 1,402 hectares. 4 kilometers south of the Christmas mine with same geology. Christmas is a model for hot breccia mineralization. The thing is, Prismo is not the first to appreciate the hot breccia copper target. Historic drill holes. Kennecott drilled 7 holes from 1972 to 1981. This is ages ago. And Phelps Dodge drilled 2 holes. Those were major legendary mining companies back in the day. All drill holes reported hydrothermal alteration within the volcanics, increasing intensity downwards. Paleozoic carbonate host units have several copper intercepts reported to exceed 1% copper plus zinc. Kennecott reported highlights: 77 feet with 54% copper at 2,100 feet, 60 feet 1.4, 25 feet 1.73. So obviously there's something there. They're hitting copper, and this is not background level copper. You're in a copper porphyry district. You're in elephant copper porphyry district. You have 2 majors that drilled a few holes, believing that there could be a big copper porphyry here. And here you have the Christmas mine. And you hit skarn, etc. That's proximal, or tends to be proximal to a porphyry target. That's what, what do you call BCM resources. They've also hit skarn, which forms around a porphyry. Here you have approximate footprint over resolution. Resolution is absolute world-class deposit, which is to the north. Here's hot breccia, here resolution, to the northwest. Absolute world-class, like billions of dollars in value. So this is the footprint of the resolution over 0.5% copper shell. This is the C10 anomaly in red. So it's suggesting that it at least has scale. I mean, we know the footprint of resolution. Is it possible that the C10 anomaly is indicating a copper shell or a copper footprint? Yes, that's the idea. The geophysical anomaly is on the scale of the footprint of the high resolution deposit 40 kilometers to the north. Is that a good starting point? I would say so. Do we know what that it is? In fact, let's say a high-grade core, or even mineralized with copper that would be economic. No, we don't know this, of course. We know what the price we're paying for the bet is. That there's no chance in hell that there is something even remotely close to a resolution mine here, because we know resolution is worth billions of dollars. We know the market cap of the company Prismo that owns this ground is like 10 million CAD. So we know that. We know there's no chance we're paying, like, the bet is cheap enough that there's no implied chance of success really. Based on the C10 results, considering a ground empty survey to further define the conductive body. And here you have exploration plan, drill permitting, nearly complete, target with similar geology and scale of Christmas and resolution deposits. I mean, these are elephants. Planned drilling 5,000 meters this year, twin or deepen one or more of the historic core holes, test C10 anomaly, target shallow gold mineralization. So target shallow gold mineralization, does that make sense? Yeah, I mean, I guess it makes sense. I'm assuming that's the, skarn portion. If you find a skarn deposit, that could obviously be worth something. To me, the main bet is still simply high risk, high reward drilling, costly deep drilling to see if there's something along the lines of a Christmas or resolution at depth. So we know there's copper here. Phelps, Dodge, and Kennecott has confirmed there's copper here, and skarn. So we know there should be a copper porphyry body. And here's the cross section through the Christmas deposit, which is they're using this as an analog. Here's the resolution deposit, which is very, very deep. But again, this is absolute world-class deposit. Very deep. High-grade copper, not too far away from the hot breccia target. So, I mean, that is, yes, there's obviously more project, Palos Verdes. This should have some value. I mean, drill hole PB2325, I guess that was drilled last year. 6 meters completed in 33 holes, 0.5 meters with 100, whoa. Okay, that was a lot higher than I thought. I had missed the gold grades here. So 0.5 meters of 102 grams per ton AU and 3,100 grams per ton AG, or 11,520 grams per ton silver equivalent. You obviously don't need too much of that to have this as at least a satellite deposit for Vizsla silver. Maybe, quicken up the payback, etc. So, I mean, is there value here? It's right. I mean, it's basically within the Vizsla silver camp. Yes, this obviously has value, especially if you hit something like this. Already, I mean, how often do you see stuff like this? So again, it's like, okay, if they miss at the breccia target, is there something of value? I mean, is there a plan B? Yes. There's a plan B. Is this a tier 1 discovery story? I don't think so. But still, it's good to have, again, some backup plan that at least if the copper project doesn't amount to something, there's still something to be done here. Even if, like, okay, Vizsla buys it for, I don't know, 5 to 10 million or something. I'm thinking about, you know, kind of a worst case, not worst case, but I mean, I want to feel like, yes, it would be good that if they miss at the hot breccia, the store is not just absolutely completely dead. That I like. Los Pavitos also a project. But again, to be honest, I think the main dish here is simply drilling the porphyry. That's the main dish for me. Because let's face it, let's say if you, I'm thinking from a bang for the buck perspective. Let's say you raise 3-4 million, and you drill, and you spend that money on drilling the copper. If you confirm a copper-rich porphyry here at depth, versus spending 3 to 4 million drilling high-grade gold and silver there in Mexico, I would think the potential for a huge shock revaluation is going to be higher here. It's in Arizona, it's in copper country, it's in elephant copper country. Copper is getting harder and harder. Copper is becoming critical for the US. If they make a discovery here in Arizona of a elephant copper deposit, and the stock is at around 10 million CAD, you can imagine what could happen. So again, okay, what chance of success is priced in? Should I be, you know, am I going all in on Prismo because I think, hey, if they make a significant discovery here, this stock could go to $1 billion. So am I going to do the Roaring Kitty kind of things? Like, I'm going to bet everything on it because, hey, if we're fortunate to hit, you're going to get rich overnight. I don't think that's a good strategy at all. We have no idea what the chance of success is. I'm thinking that, well, I actually have no idea. We just, the only things, again, we know what we pay for the bet, what's priced in. That's right now sub 10 million CAD. And we know high grade assets in historic holes. And it appears that, okay, they didn't really test the conductive body from the CTM. Obviously they didn't drill through this, but this is very deep for sure. But today we can have very deep mines. So twin or deep in one or more of the historic holes, which suggests that they didn't think some of the historic holes didn't drill deep enough. Test the CTM anomaly. So the way I think about Prismo is that, is this a valid target? I absolutely think this is a valid target. Kennecott and Phelps Dodge did that, and this was 40 years ago. Now we have some better technology. It's easier to drill deeper, and now today we can actually. Block caving is very much a thing today. I don't think it was a thing 40 years ago. I'm not 100% sure, but I don't think that's. Today, a lot of the majors, I think that's partially why Newmont bought Newcrest, because Newcrest is so good at block caving. So this is one of those extremely high risk, high reward bets out there. Because I would, if I pay 10 million for a pre-discovery, let's say, load gold play. Again, if you give a gold unit with a load gold target, if you give them money or you invest in them 10 million, let's say they raise 3 million, how much can they really prove up with 3 million? They can prove up that there might be a system there, etc. But the problem, of course, like always with load gold, is you have to drill a lot. Hundreds of thousands of meters to prove you have, let's say, a multi-million ounce system. which could be worth quite a bit of money. Again, it's of course takes time and all that. The beauty with porphyry targets, and the same goes for like reduced intrusion targets like Snowline. That was the main idea why I was so bullish on Snowline, is that they could prove up that it's huge. If it is huge, they can prove that up quickly. Whereas like the Great Bears, the Newfound Golds, etc., they have to raise a lot of money and drill for years with multiple drill rigs to prove that they have 4 million ounces, for example. It takes a lot of time, you have to raise a lot of money, yada yada yada. If they put in, I don't know how many holes they would put in. Let's say they put in 5 holes, a kilometer per hole on average, maybe, or 4 holes, whatever. If this in fact is something, they're probably going to prove that in the first, let's say, 4 to 5 holes. And then the game is on. Let's say they drill a deep hole here and a deep hole here. And if those come back, just 2 holes come back with long intervals of economic copper mineralization, I don't know what's going to happen with the stock, but you can imagine that if there's even a sniff that, hey, this could be a Christmas deposit or half a resolution or whatever, I think it's going to go absolutely crazy. I mean, I was going to say, it kind of goes without saying. If the market starts to price in that there's a 10% chance of a $2 billion deposit after, the first holes, just a 10% chance, that's 200 million. And the market cap is 10 million today. So that's a 20 bagger to get to 200 million. If it is absolutely legit, if this ends up being a $1 billion discovery, obviously, think about it. So this is probably, I would guess, one of the absolute highest torque, high risk, high reward stories out there. Meaning that I think chance of success of finding something that's going to be a significant economic copper discovery is, we gotta assume it's low. We just know that the market is pricing in that there's no chance. So let's say we say it's 20% chance that they're gonna find something. I again wouldn't go all in on a story like that, because that's 80% chance of failure, 20% chance that you're gonna have a 20 to 50 bagger. Yes, at face value, it's like, hey, if I have a substantial position in this one and that 20% chance materializes, yeah, I'm gonna probably make a lot of money very quickly as soon as the assets come back. But that's not a long-term strategy. That's just basically betting all on black with a 20% chance of winning. So 80% chance you, for a time at least, your portfolio gets cut in half. But again, the good thing we have going for us, or that Prismo has going for it, is that it's starting off at around 10 million market cap. And they have 2 other projects. And I mean, how easy is it? Will they kill the project with the first drill campaign? Maybe. But if it goes down to 5 million, is that, I mean, can something happen if it gets cut in half? Yes, they have that project in, the 2 projects in Mexico, one near Huizla, and they've hit, bonanza grade. But it's probably going to be boring for quite some time. I think the main dish, again, will be the hot breccia target. So I kind of love stories like this because they're so exciting. And you don't need to bet the farm on stuff like this. You should not bet the farm on stuff like this, in my opinion. So even if it's mathematically a very cheap bet, again, it's pricing in 10 million market cap. So there's no chance by Mr. Market priced in that this is going to be that they're going to find a copper deposit. So if it's even 10% chance of a significant discovery, it's probably very cheap right now. But one should again account for the fact that they're probably not going to make a significant copper discovery. But even if you have, let's say, a 1% position in a store like this, if they miss, that 1% position might become a 0.5% position. So your portfolio takes a 0.5% hit. I mean, that's my portfolio swings more than that in any single day, so I don't think that's a big deal. If they hit and you have a 1% position, given again where the starting price is and where it could go in case of success, even a 1% position could obviously materially impact your portfolio. If you take a 1% position at 10 million market cap, it goes to 200 million. That's a 19% boost in your overall portfolio from one position, if you held it long enough. Or if you kept your entire starting bet and let it go up 20x. 19% boost, that's a good return for a portfolio in a year. The average market average is 8 to 9% per year from 1% position. That's why I think you gotta diversify away. So it's like if there were 20 Prismo Metals story where you have this, okay, high risk, high reward bullets, or a big high risk, high reward bullet. If you had 20 similar stories, you put 1% in each, so 20% of your portfolio was in high risk, high reward, and you know what the upside is in the case that they make a significant discovery. And let's say perhaps you would need 1 out of 20 to work out for it to pay for the other 19 that are not going to make a significant discovery. Again, I hope this makes sense. But that's what I like about. I'm not a mining engineer. I'm not a geologist. There's a million things that can go wrong with a mine, for example. And it's going to be a hard time to outsmart the market when it comes to geology. My strength, as I see it, is appreciating bets, risk reward, and the only thing we know at any point in time is what we pay for the bet. So if the market thinks, or if I think, hey, there's a low chance that they're gonna make a world-class discovery here, that can be true, but it can still be cheap, because again, this is pricing in, one could say, no chance in hell there is something of value hidden here at the hot breccia target. I can understand that bet. It's very easy to see the risk. It's pure drill risk. Either they're gonna hit something or they'll miss. There's not a million things that can go wrong. This is kind of a binary outcome. Either this conductive body, which is the main target. I mean, does it necessarily need to be that if there's a deposit here, it absolutely conforms with the CTEM anomaly? No, maybe not. Still, this is the most obvious target that they would be drilling for. So I hope you get my point that yes, it's high risk, but it's at least understandable risk. I mean, that's why I don't like, buying barracks or whatever, or most mining companies. It's like the upside is not huge unless gold goes to I don't know where. But it's like, how easy is it for Barrick to double its value? Or for First Quantum or whatever. That's not easy. First Quantum, without the help of the metal prices. First Quantum lost their Cobre Panama mine, and the stock got killed. So what was the upside when they had Cobre Panama? It's not easy for First Quantum to double in value without the help of rising copper prices. But they got kind of cut in half, I think, after Cobre Panama. So how's the risk reward really in the major miners? In this case, there's more like, yeah, I can see where the downside comes from. If they miss 50% cut in the market cap, that makes perfect sense. Even though, let's say the Mexican assets are worth more than 5 million, let's say they're worth 10. There's still going to be a shock sell-off if they drill dusters here, of course. That's how the market works. It's relative. Everything works in a relative sense. But I also understand that, hey, if they hit 10 million, is going to look really cheap really fast. That's the simple. Yeah, that's a simple case. I like simple cases. I think a no-brainer from a risk-reward perspective, or any case, should be summed up in just one or two sentences, basically. In this case, it's like, okay, they're either going to hit or miss, so it's like pure drill risk, assuming, yes, drill permitting nearly complete. I assume they're going to get the drill permit, but of course until then there's still a risk of that. At least maybe, if it takes longer, that doesn't change the risk reward that much, but still it's going to, an impatient market is not going to like that, of course. But still, I understand the bet. Either they're going to hit or they're going to miss. I'm paying 10 million for the bet. If they hit something of significance, if they make a significant discovery, 10 million is going to go up so much, or the market cap is going to go so much higher than 10 million that it's like you don't need to be right on a lot of these stories, because one story like this is going to pay for numerous stories that got cut in half or go to zero. And that's what you have to diversify away, because this is investing is still a long-term game. It's a marathon, and trying to get rich quick by, again, betting all your money in the super high risk, high reward case, that's not advisable, because you can't compound a loss. But again, taking a bunch of that's why this is exciting. This is exciting stuff for me. I like this story. It's just that you have to check your greed. Yes, obviously there's a theoretical possibility that they drill this deep, they get one or two absolute slammer holes. Oh, the forum is going to talk about the next resolution or whatever, and it just gets lit on fire and becomes a 100-bagger, let's say. Yes, there is obviously a chance of that happening. But that's not enough to like, oh, I'm going to try to get rich overnight. So now I was going to talk about a lot of other stores actually, but I hope that what I'm saying makes sense. That yes, I would say, in short, this is like the definition of a high risk, high reward target. We know the context. We know we're in copper elephant country. We know it's a tier 1 jurisdiction. We know that success here should be worth more than in most places. Again, big copper deposit. Well, this isn't a huge copper deposit. Well, is this a... I don't know what the Christmas mine... I assume it's a... Okay, yeah, near surface open pit deposit, I guess, because I don't think that's going to cut it here at depth. 433 million tons or 0.38% copper. Obviously resolution is 1.53, so that works at that depth. So again, the threshold for success at Hot Breccia I think is very high, because it seems to be quite deep. But still, we know there's evidence of, oh, this is 1.5 billion ton. Yeah, almost a billion ton, 0.5%. 1.4 billion tons, 0.6%. We know there are world-class copper porphyries here. We know we're in elephant country. We know Kennecott and Phelps Dodge believed that there's a potential for a deep elephant here, and we know they hit some stuff. And now we know there's a C-TEM anomaly down here, and they believe this story is not over yet. If I'm not mistaken, I think when I talked to management, that someone had been kept this project for a long time because they thought, hey, this is not flushed out yet. And now in this new day and age of, everybody wants copper, makes perfect sense, I guess, for this to resurface now. And yeah, simple as that. So again, it's like the way I'm playing it, I'm putting a small bet into Prismo because I can't argue with it's just too attractive, basically. This is going to be super exciting when they do drill the deep holes from 10 million, because everybody's going to know what the torque is, that if they hit from 10 million market cap, if they pierce an elephant, this could be the best performing stock in the sector. With that said, knowing that we gotta assume that they likely won't hit it, so you're not betting the farm on it. And of course, there's always the option of like, hey, okay, I'm gonna keep it on my watch list. I don't like to take the, let's say, 80% risk of drilling dusters. I'm just making this number up, obviously, but again, let's be conservative. But if they do hit, even if the stock opens up 100-200% higher, and it goes to, let's say, 20-30 million market cap, depending on what the holes show, that might still be super cheap. Because again, if all of a sudden we're thinking that with these holes, these assays, we believe there's a 20%, and again, well, that's actually the same implied chance of success as I said before drilling, but let's put it at, let's say 30% chance of finding something that's worth $1 billion. That's 300 million. That's still a 10 bagger if the stock opened up at 30 million, went up 200%. So that's still a really good deal, and actually with kind of low risk. Of course, the ones that got in around 10 million, at the end of the day, if it becomes a significant discovery, they're going to be making even more. But they also took higher risk. So if someone makes more because they bet when there was a 10% chance of success, and you'll make less, but you got in when it was still super cheap, and you'll make a lot of money, and you bought in when there was a 30% chance of success, you have a higher chance of winning than the pre-discovery punter. Yeah, but he's gonna the exchange is that he's gonna make more, obviously. So yeah, this is a story I'll be following. I think it's probably the right time and right metal. Here you can see there Peter Epstein made an article. It's in the forum of Prismo Metals here that you can read. So yeah, to me, yes, they have 3 projects. To me, the main dish is gonna be, or my case is basically this target, because it's not going to matter too much on the day after the drill results whether they have the project near Wisla and the other gold project, because it's going to be, I think most of it in the short term or medium term is going to be tied to the hot breccia target. So I'm obviously biased. I own shares in Prismo. I got them on as a sponsor company to help get the story out there. And again, don't risk any money you cannot afford to lose. Do your own due diligence. Be conservative. And of course, let's face it, given, again, the high risk, high reward nature of this, is there a possibility that, if we're thinking from a trading perspective, it's like if we think 10 million is cheap, let's say we buy in, and let's say the market starts to appreciate the idea, because everybody loves a, quote, get rich quick story. So let's say they put in the, start of drilling. Let's say start on drilling news release is out whenever it is out. And we're getting closer and closer to the actual assays. I think there's a chance that the stock price is going to climb higher going into assay results, simply because the allure, again, of, hey, it's a very high risk, high reward target, but you're chasing an elephant. That is very appealing to a lot of punters, catalyst hunters, the ones that, a lot of people that, again, want to have that overnight success kind of thing. So is it totally outrageous? I'm not saying it's going to happen. Is it totally outrageous that the market cap might be closer to 30 million going into the assay results? I don't think that's outrageous. In that case, early birds have the option of, like, okay, it went up 200%. If nothing has changed, I just know it's pricing in at least some chance of success now that they're gonna make a significant discovery. So then one has the option to, like, hey, I can take some money off the table without even taking assay risks, simply because how stories like this tends to garner interest. But that's not, again, that's not necessarily like, a pump and dump or whatever. If the price goes nowhere, maybe you'll be happy to take a 10 million market cap going into assay risk. But if you're up 200% and the position is 3 times larger, it also makes sense to take money off the table, because if the chance of success hasn't changed, the bet just become a bit worse. And you have a higher position. So I guess what I'm saying is, like, even if you take a position now, you don't necessarily need to hold everything going into assay results. I think there might be, again, the opportunity of, let's say, this story getting a bit more traction. Of course, me doing this video probably helps with that. And the fact that, people love these kind of high risk, high reward stories. So I think there's a two-pronged approach where it's like, let's assume the price goes nowhere. Then it might be okay to hold your initial position, let's say, going into assay results, knowing very well that's like, odds are they're not going to make a significant discovery, and you're going to get cut in half. But if you have a position size, again, where it's like, well, it doesn't really matter. It's just, it doesn't kill the portfolio, not even close. But if they find something, if they actually do find something, and I ride it for however long, this could have a material impact. But you also have the scenario, again, where it's like, okay, that people tend to love these kind of high risk, elephant hunting stories. So if it does run 200% over the next 3 months, let's say, you have the optionality to take money off the table without even taking assay risk. And let's say you can sell everything, or you can sell partial amount, or you don't need to sell anything at all. But it's like, whatever you decide, let's say you limit you take money off the table. Okay, so you made money without taking assay risk. and let's say it does hit, then you're gonna obviously make more money, but then you took as a risk in exchange for that higher return. I hope this again makes sense. I think this is a very good example because again, it's such an easy, it's such a simple story in that sense, and how, let's say, how I think from a risk reward and betting perspective. But the thing is that, I mean, most of these stores again won't give us a 10, 20, 30, 40, 50 bagger. That's just fact. It's not easy to find it's not easy to make a significant copper porphyry discovery. There are not too many of those around. So knowing that, we have to adjust for it. But knowing what the payoff could be, appreciating the fact that, hey, we don't need to be right on a lot of these stories. The thing is, we can't afford to go, oh, I'm going all in on this. Portfolio gets cut in half. Okay, that's great. Cut in half. Then you go all in on the next one and, minus 50%. Yeah, my point is that please don't, if you're gonna speculate or invest in Prismo on the hot bridge drill play, please don't bet the farm, because again, we have to assume that there's higher chances of not finding something of significance. And you got to be comfortable with that fact. If one puts in an amount of money where it's like, hey, I won't lose any sleep, I won't get pissed off, I won't get tilted if I, get cut in half when the results come out, that's, probably a good position size. Yeah, a long rant again. I just don't like the idea of people blowing themselves up. Again, even if this is a mathematically no-brainer bet, let's say, that's still a no-brainer in a high-risk, high-reward scenario does not mean. I mean, I think position size for a story should mostly correlate with the risk. Like a very low risk, probable 100% returner, a case like that where there's like, oh, I think there's a 90% chance it's going to go up 100%, that should have much more a higher position size than a case where it's like, oh, there's a 10% chance of this becoming a 30 bagger, because in that case that's a 90% chance you're going to get cut in half. From a compounding perspective, that's going to hurt us a lot. Probable returns with low risk are much better. Yeah, so again, I hope it makes sense. It's like I find it hard sometimes to talk about these high risk, high reward stores that even if they're mathematically potentially an absolute no-brainer bet, but it comes with high risk and high reward, then I get paranoid that people will see it as, oh, there's probably a 50% chance I'm going to make 30 times my money here. I think that's very dangerous, so that's what I'm trying to limit, let's say. Again, we're in it for the long term. I don't think there's anything wrong with if you're okay with the risks in stores like this. A 1% position, for example, could be more than enough. It goes down to your risk profile, but at least this is one of those cases that's kind of easy to wrap your head around the risk. This is like mostly just drill risk. It's binary. Either this is something or it's not. If it is something, it could be a wide range of something. It could be anywhere from, there's mineralization, but it's probably not high enough grade right now for it to be of real interest. to, oh damn, they hit whatever 500 meters of 1% copper, and all of a sudden it's like, Jesus, people are gonna be talking about resolution and, or yeah, I mean that's probably what could happen if they hit something that's pretty high grade, given where we are. I mean, given that resolution is not too far away. So we kind of could front run what the forum is going to be talking about. Yeah, so anyway, long rant. Long rant, but again, I hope... Yeah, I don't know. It's like I guess I talk a lot, but about the risks and all that, but I don't want to see people blow themselves out just because, yes, there's a chance that if you're in from 10 million market cap, yes, there's a theoretical chance this is a major, becomes a major discovery, and it becomes the best performer in the entire space, because that's got to be seen as probably not going to happen. Yeah. So again, I know I can understand the risk. I'm not going to assume there's a 50% chance I'm going to make a shit ton of money in this. If maybe 20%, and that might be okay, and just your expectations accordingly. Anyway, thanks for listening again. Consider me biased. I have absolutely no idea if when they drill this, what it's going to show. Absolutely no idea. Nobody has an idea. But it to me looks at least like this is a legit target. Majors thought that as well. And somebody kept this property for a long time because they didn't think this has been tested appropriately. And the CTEM service suggests that there might be something here at depth. That coincides with, obviously you can see high grade assets in historic drill holes. They weren't up here, they're down here. So does that jive with, hey, maybe there is something at depth here? Yeah, I think so. Don't invest money you cannot afford to lose. This is not investing advice. Thank you. Bye.